Hello and welcome everyone to the Week Ahead Commodity Report presented by myself, Phil Carr, at the Gold and Silver Club. We'll be looking at the markets for the week ahead for the 23rd to the 27th of April 2018. So first of all, we'll have a look at some of the major news items which we have scheduled for next week, which will in particular affect the commodity markets and also some of the inverse correlations that you want to have a look at as well as we go into next week. So first of all, on Monday, we have existing home sales. This is taking place at 3 o'clock London time and very likely will have impact on the US dollar and some of the inverse correlations that we can often see with gold as well, with the dollar strength causing pressure on gold and also dollar weakness, providing some support for gold as well. Really, the major news item that I'm focused on next week is going to be Thursday and Friday. We've got two news items that we need to pay a lot of attention to. On Thursday, we have Mario Draghi speaking. We have the ECB refinancing rate, which is at 12:45 at London time. But after that, we also have Mario Draghi speaking. That can have a lot of impact, of course, on the euro, but also on the US dollar. And more notably, we often see that have an inverse correlation, a big inverse correlation with gold and also silver as well. So I'll definitely be looking at some great trade opportunities off the back of that news item. And then on Friday, we have US GDP data too, which can, of course, as well have a big impact on the dollar and also gold and silver too. The following week after that, we will also be gearing up at the Gold and Silver Club for the FOMC statement, which is taking place on Wednesday, the 2nd of May. Now, the commodity markets, they have very cyclical patterns going into an FOMC statement and trade opportunities which result from that FOMC statement as well. It provides a really great opportunity to trade often gold in particular, but also silver, the US dollar, and some of the correlations that we get on the commodity currencies, but more notably on gold. It can move really well off FOMC statements. I'll move over to gold very shortly and I will show you the chart for gold, but essentially over the last week, we've continued to see hedge funds and money managers raise their net long position in COMEX gold and also copper as well. We'll have a look at both of those markets very shortly when we go over to the charts. It's been an interesting week this week for oil. Oil has broken out to 3-year highs this week. We've seen oil really get talked up this week by the Middle East supply risks, and also top exporter Saudi Arabia has continued to provide support here for oil, withholding output and noisily pushing for prices to go up towards $80 to $100 per barrel are their next major targets. Now, Donald Trump was very open and vocal about his protest against this on Friday, with Donald Trump accusing OPEC on Friday of artificially boosting oil prices during rebukes from some of the world's top energy exporters. So we have actually seen a pullback here on Friday into the close. In fact, I'll show you oil first and the overall price structure that we're looking at now as we go into next week, and potentially some of the trade opportunities here as well. So oil last week, what do you need to know? Well, essentially, oil so far this month is up just under 5%. It broke out last week to 3-year highs. From a technical point of view, we are at the upper end of recent channels. We're overbought, and we could expect a potential short-term correction here, which might give us an opportunity for a swing trade if we were to see a breakdown back below. Friday's lows in particular here could give rise to a short-term trade. Now, the overall trend is very much up, so you want to be in and out quickly if you are looking for any short-term sell opportunities. At the same time, if pullbacks are very shallow and we get another break, let's say back above Friday's high here and a continuation pattern, it could also be a great opportunity just to get into the overall upward trend here as well if you don't already have a position. So we're going to be watching the price structure very closely here for oil as we go into next week. Major news items that you want to be aware of will of course be Tuesday's API data and Wednesday's crude oil inventory data as well, which can have a big impact on short-term oil price. And of course, keep track of major news items from OPEC, major energy reports. If we have a look at Brent crude oil here, We're currently poised towards the upper end of the trend channel, broken out to 3-year highs. Into the close on Thursday, we had a rejection candle from overbought. Friday, we pulled back a little bit here. Now the real test is going to be whether in the early part of next week, do we roll over and do we provide a sell short position here, or do we get a signal for a sell short position going into the early part of next week, where we could see the price structure roll over just temporarily, potentially from also a rising wedge price structure here as well, which could give rise to a short-term sell opportunity, or we could just see a very temporary pullback and then just a continuation and break back above last week's highs. So we will be watching oil closely as we go into next week. A market that I definitely want to bring to your attention is silver. So silver we've discussed on a number of occasions on the week ahead reports, where more recently at the beginning of April and the end of March, the gold to silver ratio got to 80-1. Historically, when the gold to silver ratio gets to 80-1 or higher, pay a lot of attention to silver, because it can give some really fantastic risk to reward trading opportunities. Last week, we saw one of the biggest one-day moves that we've seen in 2 years. The last time I saw a one-day move like this on silver was actually after Brexit, where we saw some huge gains here for silver. Over the month of April so far, silver has been up over 5%. Last week, midweek, we gained over 3.5% to the upside. We pulled back a little bit here into the close on Friday, around $17.10. But really, the major trade opportunity was catching this entire breakout to the upside, which we've mentioned several times on our week ahead reports here, that you didn't want to miss the potential for a breakout here. And we've seen a big surge here midweek, taking the price back towards a monthly pivot, the Keltner channels, until we've seen some profit taking here, which is to be expected after such a considerable move. So we've caught this big pop higher, which on a percentage basis has been quite considerable here for silver. Now, as we go into next week, I do expect a bit of backing and filling, because we've got so many news items happening next week, and then we'll be gearing up for the FOMC statement the following week, which can provide some great opportunities. So for us at the Gold and Silver Club, the breakout here on silver over the last week has been incredibly profitable here for our long positions on silver. What I would keep on the radar going into next week is going to be platinum. So platinum, we've been long platinum and we've banked profits last week, and now we're looking for re-entries. Into the close on Friday, there is actually a sell signal now on platinum again. We've got platinum trading into the close at $929. I am looking for fresh buy opportunities on platinum. The optimal zone I'm looking to re-establish a long position on, and in terms of timing on this, ideally it would occur around or after the FOMC statement if we were to see platinum pull back to this level. So remember, the FOMC statement is taking place in about a week and a half. And if platinum was to come back down to approximately $900, maybe a little bit higher than that, but ideal zone would be about $900. If we were to come back to that level, we can overshoot that slightly. It can come back as low as about $875 would be okay as well. That for me would be a great opportunity to pick up another swing trade on this market in order to take the price all the way back towards the recent ranges. So platinum, historically, if you go back to the last few years here and you have a look at the major levels that platinum resides between, typically price structure, if you get much below $900 on platinum, it doesn't stay for long at those prices. And also the gold to platinum ratio at the moment is one of the most extreme it has ever been. So relative to gold, platinum is incredibly cheap. Platinum has never been this cheap relative to gold. So if it continues to follow through to the downside next week, and we have the potential for a bear flag, which may continue a bit more downside here, I'd be more inclined to go long the dollar rather than short platinum, because of the potential to get into a lot of support at this zone around the 915 to 925 zone. And we also have Mario Draghi speaking next week and a number of other news items too, which could cause a little bit of backing and filling on platinum. I'd be more interested in just buying it back in an accumulation zone. So you want to be aware that if platinum was to get back down to around, let's say, $865 to $900, for me, that would be a buy zone that I would be very interested in re-establishing long positions on. And then finally, of course, you want to have gold here on the radar as we go into next week too. So gold actually into the close last week has sold off. We saw dollar strength and gold has weakened a bit. It's had several attempted breakouts above $1,355 over the last week, where it's not actually managed to follow through above that zone. So we haven't seen it continue to develop that momentum, although silver did last week. Silver broke through some considerable resistance. Gold is still up on the month, so it's up about 0.77% on the month so far. Again, going into next week, we have a lot of data which can certainly impact the price of gold. I would be aware that going into next week, we have seen an increase in the net long positions from hedge funds with gold here, and we might well see again support come in here around an accumulation zone, which I perceive at between $1,330 and then taking the price back to around approximately $1,305. That will be a sweet spot at the moment whilst gold is continuing to be range bound. So right now, gold is really ranging between $1,365 down to approximately $1,310. We've been moving within that range since the beginning of February towards middle of April now. We've just continued to ricochet really between those levels of support and resistance. We might well find buyers come back in again around 1,330. We've seen the price get supported at that level throughout the whole of April. It will test that level, but very rarely does it actually close around that zone. Normally, it gets bid up into the close. There's certainly going to be some great trade opportunities next week with so much data coming out. Gold can be really well traded from a swing trade point of view and also a day trade point of view with a lot of these news items that we have coming up. And then the following week, we also have the FOMC statement coming up as well. Now, what is really important when you're trading commodities is to have real-time data. So we have a number of news items coming up next week, which of course include the oil inventories data, we have US GDP data, we have Mario Draghi's speech. So for more information on the private members live trading room and the different training programs that we provide at the Gold and Silver Club, access to our real-time data and news feeds, go to www.jointhelivetradingroom.com. So with that, I wish you all a fantastic weekend, good trading, and of course we'll see you back here next week for the week ahead commodity report.